Hey everyone, let's talk about something that sounds boring, but actually runs the entire business world. Assets. Now, I know what you're thinking. Assets? Sounds like accounting stuff. But stay with me. By the end of this video, you'll realize assets are basically what make a company a company. What are assets, really? Think of assets as everything a company owns that helps it do business. Imagine a coffee shop. It owns the espresso machines, the cups, the tables, the coffee beans, even the truck that delivers the beans. Those are all assets. Simple, right? So yeah, in a way, a company is its assets. Now, accountants like to organize things, so they sort assets by how easily they can be turned into cash. Current assets are things that can be quickly turned into cash, like cash itself, or things you'll get paid for soon. Non-current assets are the long-term ones, stuff like buildings, equipment, or land. Cash and marketable securities. Every company needs cash to survive, to pay bills, employees, and keep the lights on. But have you ever noticed how some big companies sit on piles of cash? Why? Usually it's one of three reasons. One, they're preparing for hard times, kind of like keeping an emergency fund. Two, they're saving up to buy other companies. Or three, they don't really have better things to invest in right now. But since money sitting in a bank doesn't earn much, companies often put it into marketable securities, short-term investments they can easily turn into cash. So, on the balance sheet, you'll often see cash and marketable securities grouped together. Wait! Quick pause before we continue. If you've learned at least one new thing so far, hit that like button and subscribe. Seriously, don't be that person who knows what goodwill means but still forgets to like the video. We can't let accountants have all the goodwill, right? All right, let's keep going. Accounts receivable. Here's another asset, accounts receivable. That's just a fancy way of saying money customers owe you. Let's go back to our coffee shop. Imagine the cafe supplies coffee beans to restaurants and lets them pay 30 or 60 days later. Those unpaid amounts, yep, that's accounts receivable. It's money the company will get soon, but doesn't have yet. Inventories. Now let's talk about inventories, the goods a company plans to sell. Inventories include raw materials, what you start with, work in progress, what's being made, and finished goods, what's ready to sell. For example, a furniture company might have wood and fabric as raw materials, half-assembled chairs as work in progress, and fully finished sofas as finished goods. But not every business has inventory. Think about a law firm or a financial consultant company. They sell services, not products. So yeah, service-based firms don't have inventories. Property, plant, and equipment. Next up is PP&E, which stands for Property, Plant, and Equipment. It's basically all the big physical stuff a company uses to operate. Buildings, machines, stores, delivery trucks, even that espresso machine at the cafe. A manufacturing company might have giant factories and machines. A retail chain might have hundreds of stores, all part of their PP&E. Other assets and the mysterious goodwill. Finally, there's this strange category called other assets. That usually means intangible things, like patents, trademarks, or brand names. You can't touch them, but they're super valuable. Here's the funny part. Accountants usually don't count those unless they know exactly how much they're worth. So even if a brand like Nike or Apple is worth billions, it might not even appear on their books. But when one company buys another, those intangibles suddenly get a value because someone actually paid for them. That's what we call goodwill, the extra amount a company pays beyond the book value of another company's assets. So yeah, when you see a company with a big goodwill number on its balance sheet, it means it's been out there buying other businesses. So, to sum it up, assets are everything a business owns that helps it make money, from cash and coffee beans to machines, and even brand reputation. In short, if liabilities show what a company owes, then assets show what it owns. And hey, if this video made assets sound even slightly less boring, you owe me one. So hit that like button and subscribe, and join me next time when we'll make liabilities sound exciting too. Yes, really.